Let me give you a challenge. For 1 week, you are not allowed to say I am bullish or I am bearish. You can only say the market is bullish or the market is bearish. Sounds silly? Well, it's not. Trust me, this small shift can improve your results as it forces you to see the market more clearly, just as it is. Because the moment your opinion becomes your identity, you stop protecting your capital and you start protecting your ego. So in this video, I want to show you how that happens, why it destroys your performance, and what you can do today to break the cycle. Being wrong hurts, not just financially, but psychologically, because when the market proves us wrong, it clashes with the image we hold of ourselves, like I am smart, I am logical, I am in control. That emotional discomfort is called cognitive dissonance, which is experienced when a person holds two or more conflicting beliefs, ideas, values, or when their actions contradict their beliefs. Let's say that you are very bullish, but the market keeps going down. You are optimistic, yet the market does not reflect what you think. So this psychological tension motivates people to reduce the discomfort by justifying their actions to restore consistency. So what do? We start defending our opinion. We look for reasons why we were actually right all along. We zoom in, we cherry pick, we call that gigantic red candle just noise, right? Just another overreaction. That's confirmation bias, as Nickerson describes in his study called Confirmation Bias, a ubiquitous phenomenon in many guises. You are not analyzing anymore, you are just defending. And here's the kicker: the smarter you are, the more dangerous this gets, because now you are using all that intelligence to build a story, instead of accepting the data. That's called motivated reasoning, which is the tendency to process information in a biased way to reach a pre-existing desired conclusion rather than arriving at an objective truth, as described by Kuda on his paper, The Case for Motivated Reasoning. It is how our brain protects us, not from financial loss, but from emotional, personal embarrassment. Now here's where it gets worse. We don't just believe in our opinions, we start becoming them. I am bullish, I am bearish, I called the breakout, I nailed the bottom. Now your opinion, your idea has a name. Your name, and that's a little badge of honor. You don't want to let go, because walking away from the trade feels like walking away from who you are. That's called identity protective thinking, which is the tendency to reject information that contradicts one's group beliefs to protect social and personal identity, as described by Kahan in his study called Misconceptions, Misinformation, and the Logic of Identity Protective Cognition. You are not protecting your capital anymore. You are protecting your image. And what about the market? Well, it couldn't care less. It does not reward ego, it rewards adaptability. When you become obsessed with an idea and it becomes your identity, you will actively seek to protect it with everything you have, regardless of whether reality proves you wrong. You simply cannot see it. This can happen with basically anything, and it is very common in politics. For example, we often see the herd protecting their politicians and their ideas, feeling that they are part of something. This is even comforting, but in the financial market, it is truly insanely dangerous, as it can simply ruin your life. You can actually lose a lot of money. When your opinion becomes your identity, you start trading emotionally, not strategically. So how can you avoid these pitfalls? What can we do to disconnect our ego, our personal image, from our trades? I already gave you guys a tip at the beginning of this video. Stop saying I am bullish or I am bearish. Understand that your opinion means absolutely nothing to the market, so you can't rely on it in the long run. It is not a good idea. But then, what do I trust? Trust the charts, the fundamentals, your strategy. Let the market convince you to take action by fitting into your strategy rather than forcing your strategy to fit in what the market is doing right now. Reverse that logic. As we already talked about in our video on the 4 primary trading fears, you have no reason to be afraid of being wrong. As Mark Douglas describes in his book, Trading in the Zone, the only way to overcome fear, anxiety, and stress in trading is by working with a clear strategy. Always know where to place your stop loss, not because you think it will go wrong, but because you know it can go wrong. And that's okay. It is also okay to subscribe to this channel because here our purpose is to help retail traders to trade better with more awareness, not only of the market, but of themselves, of ourselves, always based on facts and science. And I keep you guys updated on the market every single day in our daily analysis, so join our community and like this video if you are enjoying it so far. Now, you may have a few questions in mind. But I need some conviction, right? Conviction is the key. How can I trade if I'm not convicted about anything? Yes, you need conviction. Conviction in the process, not in a prediction, not in a gut feeling. We are not gamblers. But what if I exit and it reverses without me? What if I sell my stock and then I see it going up insanely high, etc.? Then the market taught you a very important lesson. Patience. Your job is to protect your capital and wait for the next valid trigger. But I don't want to look stupid. Looking stubborn is worse. Quiet discipline outperforms loud certainty. But isn't this too boring? I want some emotion. Well, amateurs seek adrenaline in the market just like those who gamble in a casino. But that's the difference between professionals and amateurs. Those who are serious about what they do can find peace in the market by following their method. Without fear or anxiety. This is serious, and it is for you to have consistency in the long term. Leave emotions to amateurs who have not yet understood how to be consistently profitable, and they treat the market as a fun casino. So let's do a little exercise together. Let's say the market is in an uptrend. Alright, rising strongly. How do you identify the trend phase and how do you trade appropriately, controlling risk, mitigating potential losses, and maximizing profits? Well, I teach you guys how to do this in our technical analysis class, which is available here on this channel completely free of charge. So, okay, you have identified that the trend is bullish, okay? You already know that the odds favor the bulls because we are rising, we are going up. So the most appropriate thing to do right now is to buy, not sell. But what if the market reverses just when I enter? I'm gonna look so stupid, right? Only those who don't use stop loss to control risk are stupid. Having a bad trade does not make anyone stupid, so there is nothing to be afraid of. But I believe the market won't sustain itself, and I have seen several news, several stories talking about how expensive the market is right now and about wars, tariffs affecting global trade. We have a possible AI bubble, right? There is no way it can keep going up. Well, but if the market is bullish, if the market is truly bullish, then your thesis doesn't matter. Because have you ever stopped to think that if you, a retail trader, know all of this, imagine the smart money. It is very likely that everything you are talking about has already been priced in. So you are not, and never will be, like Michael Burry, who identified this subprime bubble. I'm warning you right now so you don't suffer later, okay? So you can thank me later for this. So focus on your strategy. Don't follow or depend on gurus. To this day, I still remember Kathy Wood in 2022 selling her positions in Nvidia because it was overvalued, right? And I saw so many people repeating that line in 2022. Look where Nvidia is right now. It has multiplied its value literally tenfold. So look, you are not your win rate, you are not your last call, and you are definitely not your worst trade. You are like a probability manager, not a fortune teller. So let go of the need to be right so you can be free to trade well. Detach your identity, follow your process, and protect your capital. That's how you truly last. And please remember this, opinions are worthless. Identity is expensive, and your ego costs the most. Thank you so much for watching.